The Nigerian Stock Exchange closed this week 1.46% higher at 99,587.25. We could just have that particular one displayed here, the All Share Index, where we saw that we gained just about 1.46%, and that closed at 99,587.25. And now to market capitalization. We saw a market capitalization of 56.323 trillion naira for market capitalization. That was what we saw in the markets last week, 56.32 trillion naira, and the percentage change is also 1.46%. And overall, investors exchanged 1.941 billion shares valued at 32.644 billion naira. And we'll start by looking at the top gainers from last week's activities. We have FBN Holdings topping that particular one at 32.68%. And then we also have Sterling, 27.75%, USAN PLC, 24.60%, Julius Berger, 23.76%, and we have Flour Mills of Nigeria, 20.66%. And here you see the closing prices. Two top losers from last week's activities. We have NASCON here, 17.03%. I mean, that was a loss. University Press, also another one, 16.67. Nimeth, 14.14. Berger Paints, 9.87. And we have Vitafoam, 9.81. Well, now let's look at the sectoral performance now. And so for sectoral performance, we see that the financial sector, that's the financial services sector, dominated trading, contributing over, about 75%. And we have banking here at 9.42%. We have insurance, 0.98%. And then for oil and gas, we have a dip. For consumer goods, we also have a dip. And then for industrial goods, we also have a dip. So this sort of gives us just a view of what happened yesterday, not yesterday anyway, last week during the market activities. We'll take a break now. When we come back, we have a first conversation on the show for today. Stay with us, don't go away. The crackdown on Nigeria's crypto industry has left its young residents feeling more mistrustful and bewildered. The Central Bank of Nigeria and the National Security Advisor are planning stricter regulations, marking a significant shift from the previous administration's approach. Despite this, Nigeria has shown significant interest and growth in cryptocurrency transactions, particularly in remittances. However, there are concerns about the impact of the crackdown on the industry's future and job opportunities. Dr. Iwa Salami, Associate Professor in Financial Law and Regulation, University of East London in London, UK, joins me for this. Thank you for joining me today.
And thank you for having me. It's a delight to be here.
All right, well, Nigeria seems to be clamping down on crypto exchanges, and fintechs had to probably close shop on crypto following the classification of cryptocurrency trading as a national security issue by the NSA, Nuhu Ribadu. However, do you think this is going a little too far?
Well, the crackdown, of course, has come at a time when, in the industry, there's been a lot of movement around how to actually deal with issues with crypto assets transactions. And globally, we have financial regulation and regulation really that really caters for the pain points of crypto assets, including things like the anti-money laundering and terrorism financing provisions that deal with the money laundering financial crime threats. In the case of Nigeria, over the past few months, there have been several issues that have arisen around the potential for crypto assets to be used as a tool to facilitate speculation that has then led to bringing down the value of the naira. To a lesser extent, there has been issues around using crypto assets to facilitate crime. But I think what isn't very clear really is the big issues here that has warranted this, I'd say, drastic actions coming from regulators in Nigeria. So, of course, that has been the reason why people actually are thinking maybe this may be slightly more extreme than not proportional an approach to regulating the space, only because we see now that enough regulation is coming out across the world, and a lot of countries are adopting this to actually allow the industry to thrive.
I'd like to take you on this particular one. Do you think we have enough data to show that these exchanges or some of these trading activities are directly or indirectly, sort of swinging the naira's value? Do we have data to actually emphatically say this is what is happening, before going on ahead with the scam that we're seeing every other day?
So that's a very good question, because in all of this, there hasn't really been any clear evidence as to why these actions have been taken. Although we know that we have, blockchain analytic firms that actually work quite closely with crypto asset exchanges to let regulators know what is actually going on. So these are regulatory technologies and what we call RegTech solutions providers who actually can make regulators see what's going on in terms of the types of transactions, money passing through, outflow of currency, of the type of data really that we want. Nothing has been pointed towards those types of data. And so that even makes it slightly more, if you like, questioning as to, really what's driving all of this. But we do have blockchain solutions, analytical firms that can actually show us what's going on. But there really hasn't been any pointers as to where this data is coming from.
All right, so apart from this Naira conversation, you've mentioned another concern, which is the concern the regulators have about the risk of terrorism financing and money laundering. And I know this is largely due to its pseudonymous nature, but how can we ensure that, cryptocurrencies' financial freedom doesn't become a tool for illicit activities? I'm just saying, how do we ensure that, some of the freedom that we have in cryptocurrency exchanges and all of that does not sort of encourage some of those things that we do not want to see, like money laundering and illicit flow of funds?
So there's two ways that crypto assets can be transacted. It could be transacted on centralized virtual asset service providers or centralized crypto asset service provider platforms, or they could also be transacted through decentralized finance platforms. Now, when they're transacted on centralized crypto assets exchanges, those across the world are now being regulated. So across the world, the international standard setter, or if you like, the international watchdog, the Financial Actions Task Force, has kind of sort of led the way here, providing recommendations for countries to actually follow, instituting what is known as the travel rule that makes crypto asset exchanges, or requires that crypto asset exchanges know who is transacting on them, and also that for certain types of transactions, depending on the limit and the amount, that where the funds are actually, the communication between who sends the funds and the communication, i.e. the exchange that sends the fund and the exchange that receives the funds, that requirement as to knowing the parties that actually sending and receiving on those exchanges, that we know the identities of those parties through what is known as these travel rules, depending on the amount that's being transacted. And a lot of exchanges, crypto asset exchanges, have implemented these. So the question of sort of terrorism financing and financial crime can actually be monitored because we have this provision. And like I said, we have solutions. We have RegTech solutions providers that help exchanges implement these regulatory requirements. So those solutions exist. Totally different from the transactions that happen in decentralized finance, i.e. in the decentralized finance space, where to date we still don't have the requirements for people, for those platforms to tell us or show us the people that are transacting on them. Now, for the provisions that have been passed so far, or the clampdown that have been passed so far from the Nigerian context, they have been targeted at centralized crypto asset service providers who can actually, meet those requirements, who can actually require that we know the parties transacting on them in order for us to really fulfill the know your customer requirements that tends to want to deal with problems like terrorism financing and financial crime. The whole idea around financial crime and terrorism financing and money laundering is really around us knowing the parties that are transacting on in those spaces. And if we know those parties, when suspicious activities happen, we know who they are, we can track them down. And as I say, those solutions actually exist.
All right. So looking at all that's been happening, in recent times, do you think that Nigeria is just sort of trying to get itself off the grey list of the Financial Action Task Force? Do you think that's what all of this is about?
So there are ways that Nigeria can get itself off of the grey list imposed by the Financial Action Task Force. And like I said, the Financial Action Task Force, puts recommendations out there for that, the Nigerian authorities can actually follow. Again, there are solutions that, Nigeria can require exchanges to comply with, sort of rected, in order for us to know what is happening on those exchanges. So I wouldn't really say that these actions are necessary to comply with, to be taken off the grey list. No, because there are ways that we could regulate to ensure that the Nigerian regulators can actually get what they want in terms of knowing who is transacting on the spaces, in terms of implementing sort of KYC, preventing financial crime, money laundering. So I mean, if we're saying this is to get them off the grey list, I think there are other ways to actually go about it than actually instituting regulations that potentially stifle the industry and potentially sort of prohibit quite a few people in the economy that are quite reliant actually on this, on crypto asset exchanges, given the unemployment situation.
All right, we'll come to that conversation, but before then, we anticipate a meeting today between SEC Chief and, international and local crypto exchanges. What are your thoughts? What do you think will come out of that particular meeting, or what are your expectations, really?
So I have to say, hearing about that meeting for me was quite impressive, because I think the beginning of the conversation of us having regulation that is effective in an industry that has potential is around getting all the necessary stakeholders and parties around the table to actually have conversations and discussions, as is being done and continues to be done across the world and across countries where regulators actually are forward thinking about financial innovation and financial technology. So it's a good thing that the Securities and Exchange Commission have actually, called for this meeting that brings together industry players, blockchain, those from blockchain, crypto asset community, to actually sit down to actually have that conversation about the issues and about really how best to approach it, and also to discuss, the approaches, workable approaches to regulation. In the UK, we had this similar approach way back, I'd say in 2022, where the Financial Conduct Authority brought together, technologists, crypto asset industry players, brought together, obviously, regulators from the SEA, were there, academics, because I attended that as well, I was invited to attend that. And it was an amazing experience, because we had all the key stakeholders sat by a table, teasing out and having conversations about the best approach to regulating the crypto asset industry. And I think that's a very good step, because until we actually do that, what we're going to be having are very unclear actions that's not needed for the growth of the industry that has potential. And what we will keep having would be pretty much almost like knee-jerk reactions to something that's happened and we feel we're going to ban or stifle or prevent people from accessing crypto asset exchanges. And all of these don't quite really cut it. And fundamentally, because we have the decentralized finance platform where people who are hell-bent on engaging in crypto asset transactions will go to. So if they cannot access the crypto assets, if they can't access centralized crypto asset exchanges because they're heavily regulated, they will find a way. And they will do that through the decentralized finance platforms, which is even far more difficult for regulators to exist. So for regulators to regulate. So I think this conversation with the community, of the crypto assets community and the industry is a good thing. It's a good way ahead to devising I'd say, effective regulation for the space.
I like your optimism, but you know that this is the same country that sort of released some regulations for VASP last year. And a lot of persons were optimistic that this is a good signal. So are you confident that at the end of the day, after this meeting, we will also come back to this point where, we keep having this calm down and all of that? I mean, I'm just looking at it. I'm asking, doesn't this signal conflicting directives and policy somersault, really?
You're right, I have to say. Yes, because of course we know that the messages that has come out in the approach to regulating crypto assets in Nigeria hasn't been a very consistent one. Initially, there was that whole approach of be careful, and then we had an approach of banning, and then we have an approach of actually release the ban, and then we're having an approach of taking away access, bringing on board the telecoms regulators to take away access to people to access, quite big crypto asset exchanges like Binance and Coinbase and the like. So it's a huge conflict of information and messaging going out. But like I say, a good starting point is to actually bring everybody around the table. Nothing is guaranteed that, I mean, this is just baby steps, first steps. Nothing is guaranteed that actually they come together, we would have effective regulation. We'll start that process towards implementing effective regulation. But it's a good thing that the regulators want to actually sit with industry players, because conversations can be had, approaches can be had, and not, I don't think, across the world, not everybody who wants to, engage in crypto asset industry is a fraudster. And I think regulators should be coming at it from the perspective of actually we want to see an industry thrive, an industry that has potential to create jobs, an industry that has potential to facilitate financial inclusion, an industry that has potential to, give opportunities to MSMEs and SMEs, and I think regulators should have a look at it from that perspective and want to make it work rather than sort of stifling innovation. So balance, I think, is a good thing here, and hopefully, these conversations would achieve that.
All right, Dr. Iwa Salami, that's a good place to end it. Balance is what we seek, especially looking at the money that is involved in that particular industry. We cannot just let it go away when we can do something about it. Thank you so much, Dr. Iwa Salami, Associate Professor in Financial Law and Regulation, University of East London. Thanks again for your thoughts. Glad to know you're still with us. The Nigerian insurance industry has faced a unique set of challenges in recent years. Today, we'll be speaking with an analyst in the Nigerian insurance sector to get insights on the industry's performance and future outlook. We'll delve into topics such as the impact of macroeconomic headwinds, potential for growth, regulatory changes, and building trust with customers. Joining me for more on this is Ayokunle Olubunmi, Head Financial Institutions Ratings at Augusto & Co. Thank you, Ayokunle, for joining me today.
Thank you very much, Perpetua. Good morning.
Good morning to you, too. Well, let's just start with this. Would you say the industry has demonstrated any form of resilience so far amid prevailing macroeconomic headwinds? Did you get that, Ayokunle? Okay, Ayokunle, if you can hear me, I was asking your thoughts on, the industry performance so far. Do you see any form of resilience, especially looking at the prevailing macroeconomic headwinds that we have seen so far in the year coming from last year, 2023? All right, so if you can hear me, I was asking you what you think about the industry, really. Do you think it has demonstrated any form of resilience so far, especially looking at the prevailing macroeconomic headwinds that we have seen coming from last year into this year?
Oh, thank you very much. I think the industry has been resilient. If you look at our 2024 Augusto & Co. Insurance Industry Report, you realize that the macroeconomic environment has actually been challenging. GDP growth were at 2.7% last year, or just slightly above the 2.5% population growth rate. Inflation at 25% was also at historical high. right? However, notwithstanding these challenges, and even coupled with what we are seeing in the lingering liquidity in the foreign exchange markets, notwithstanding this, the industry continued its growth by double digits last year, and actually even exceeded the 1 trillion mark in terms of the GPI. GPI and industry grew to about 1.3 trillion last year, right? Notwithstanding these macroeconomic shocks and even challenges that we have seen.
Well, when you say that the GPI actually increased, it was above 1 trillion now, but then you also look at the fact that industry benefited from high interest rate environment and significant foreign exchange gains from, investments in Eurobonds, foreign currency placement, and USD mutual funds. I mean, these trends do not seem to go away anytime soon, or do they?
Yeah, I agree with you, because the industry last year, they didn't only grow the GPI, the investment return also increased significantly. Don't forget that the equity markets provided significant return last year, and with the CBN getting more commencing with tightening stance, right? Interest rate also soared. Right, so definitely the industry performed well last year, and the return on investments increased by 500 basis points to 12.2%. And in 2024, we expect the performance to also be better. Although the depreciation that we are expecting this year will not be as steep as that of last year, we believe that the CBN will continue its tightening stance that will support the industry's investment income. And we expect the average return on investment to be at a minimum of 14% in 2024.
However, be that as it may, insurance penetration in Nigeria is still less than 1%. So what is responsible for this? And are there policies or actions we expect either from the industry players or even the government, to sort of spur interest in this particular industry?
I agree with you that notwithstanding the performance that we saw last year, the insurance penetration is actually even low. And if notwithstanding, and another one of the reasons why the industry recorded such a growth in GPI is also because of the potentials that exist in the industry. And I agree with you, there are a lot of reasons why we have insurance penetration that low in Nigeria, one of the lowest in Africa, right? First has to do with defective religious beliefs. Some people believe that once you subscribe to insurance, you are inviting evil to come, or it means that you are prophesying that you are going to actually even have that risk. Also, the level of awareness about insurance is low in Nigeria, even among the educated populace. You'll be surprised when you talk to people that you think that they are educated. You'll be shocked by what they know about insurance, and a lot of them don't really have a good grasp of what insurance entails, what it doesn't entail. The declining consumer purchasing power can also not be it's also one of the major reasons why we can see that insurance penetration is still low in Nigeria. Then also bad experience that some people have had with insurance, either themselves or their friends that they've had with insurance companies over the years, and even deter them from even taking up insurance policies. On what to expect to improve this, currently Nikon is leading a campaign for people to understand what insurance is about, particularly in areas where the insurance adoption is quite low. Also, each individual insurance company, you see that a lot of them are bringing in new products to cover some risks that some people have not even covered before. What you've also seen is that a lot of insurance companies are also working on their distribution channels. I could say authoritatively that almost all, if not almost all insurance companies are working on some digital solution to help them to distribute their products. The micro insurance will also help, because microinsurance is simply an insurance that is for insuring low-valued assets, right? And even enable people to pay their premium instrumentally. And that window has been open to all insurance companies. So those will actually even help in improving the insurance penetration in Nigeria.
All right, I want to take us back to what we talked about earlier, talking about the GPI. Now, the uptick in the industry's premium was driven by premium rate adjustments on policies such as fire and good in transit. And we also remember the increase in NICOM's third-party insurance for private vehicles from 5,000 naira to 15,000 naira, and also an increase in comprehensive insurance cover. Now, this speaks to strong regulatory support. Now, beyond this kind of support, don't you think it's also important to get Nigerians to actually trust insurance and desire insurance? What actions are being taken to get this to work?
I agree with you. A lot of Nigerians is either they are not aware about insurance, a lot of them have a bad perception on what insurance is and what insurance is not. Like I mentioned earlier, right, Nikon is leading a campaign to ensure that, look, people even understand what insurance entails. But I also believe that insurance companies also have the duty of educating their customers, educating the populace about what insurance covers, what insurance does not cover, what it entails, the basic principles of insurance, how to get your claim right, and if you have issues, how you can get it resolved. Should I say that unfortunately, the way insurance companies are scrutinizing claims now, because like we all know, in a period of macroeconomic headwinds, right, fraudulent claims tend to increase. So the way they are scrutinizing claim can even result in more Nigerians having a bad perception about insurance. But I agree with you, a lot of things needs to be done to ensure that Nigerians have more faith in insurance and insurance products.
Well, I think a lot of work, maybe the insurers need to do more work, because when you talk about health insurance, a lot of persons know about it, even though a good number of the people who have signed up for it are it's probably their companies that did it for them. But then, you just know that people are aware, they want to do it. Some persons just do not have the money. And I think that's because they can see it's work. So shouldn't these insurers also ensure that people see their money's work? When it's time for claims, you don't tell stories. Because, I've interviewed some persons and they tell me that certain things they didn't even know on the point of signing up, they get to know those things when it's time for claims. And then they're telling you to bring one form and one other thing. And then you're wondering, this wasn't communicated earlier. So, shouldn't we tell them to even do better, to do more, to train even their FAs, their financial advisors and all of that, to say the right things to people?
I agree with you, and I think this is one area where the new Nikon management might need to look at. I agree with you, because like I said earlier, a lot of us in Nigeria, we don't understand insurance, what it entails and what it doesn't entail. And I think from the point of even selling that particular product, right, the financial advisor, like you mentioned, or even the broker in that case, needs to tell Nigerians, needs to tell the insured what it covers and what it does not cover. Because some of us, when we're even taking up insurance policy, we don't even have a full grasp about what it covers and what it does not cover. And that's why at times some people prefer going through a broker. Because when you have an insurance broker, you explain to the insurance broker your insurance need, right? And he can even recommend the appropriate policy. But I agree with you, this is an area in which the industry needs to work on significantly if you want to see a significant improvement in insurance penetration.
All right, back to your outlook. Your outlook is quite positive based on some of the factors that we've talked about. But what about, don't you see any negative impact from declining consumer purchasing power? I know on the one hand, the headwinds has its gains, but then what about this part of it?
Yes, definitely there's no industry, there's no sector that can continuously outperform the macroeconomic environment where you're operating. And the insurance industry itself is not left out. Because despite the growth that was recorded last year, if you ask a lot of insurance players, they will tell you that the policy counts that we have, the growth there significantly was below their expectation or the projection for the year. So in terms of the premium, because of the growth in the premium rates helped to even support the growth. However, if you look at the policy count, the number of policies that were actually even written is quite even low compared to what the projection was at the beginning of the year. So definitely the macroeconomic environment is affecting the insurance industry. And we believe that that's even the reason why the industry's growth is a bit quite limited. Because when you have low consumer purchasing power, you will notice that, look, a lot of people will be finding it difficult to even pay for policies. And don't forget that what we've seen also is that people are also trying to reduce their expenditure on things that they perceive as luxury. Unfortunately, a lot of Nigerians still see the insurance as a luxury and not a necessity that they can actually even use.
All right, thank you, Ayokunle Olubunmi, Head Financial Institutions Ratings, Augusta & Co. Thank you for your time on the show today. Do have a pleasant day.
Thank you for having me.
All right, we take a break now. When we come back, we have another interesting conversation. Do not go away. You're watching Business Edge. Glad to know you're still with us. And of course, our final conversation for today, which I said will be quite interesting. Now, Fitch's revision of Nigeria's outlook to positive reflects confidence in the economic reforms implemented under President Bola Tinubu, including subsidy cuts and currency adjustments. While challenges like high inflation persist, Measures such as rate hikes aim to stabilize the economy. Nigeria's B- rating, while in junk territory, suggests room for improvement amidst ongoing reforms. And joining me for more on this is Director, Research and Strategy at Chapel Hill, Denham, Tajuddin Ibrahim. Thank you, Tajuddin, for joining me today.
Thank you so much for having me on the show today.
All right, well, Fitch has just revised Nigeria's outlook to positive from stable, citing the country's economic reforms under the new president. Was that just what you expected?
So it is consistent with what we expect, because if you look at the economy within the past 12 months, the government has implemented a lot of reforms, particularly two major reforms that have shaped the fortunes of the country and that look like laying the right foundation for the country. Number one is the removal of fuel subsidy. No doubt, we still recognize that there is still some element of subsidy. Nevertheless, the current subsidy that we have is much lower than where we were previously. The second element is around the unification of the exchange rate, having taken into consideration several devaluations, about 3 or 4 devaluations since in the past sort of 12 months. So I think, it is consistent with what Nigeria is doing. The third element is around the reduction in the ways and means, which is the, overdraft to the Nigerian government by the central bank. That is another consideration by Fitch rating. So we have seen the movement or improvement in our rating from negative outlook to stable outlook, and from stable outlook to a positive outlook. And I think the next thing that can happen if we maintain the current momentum around the reforms in the economy, the next thing most likely will be an improvement or an upgrade of our credit rating as a country.
Well, that's quite interesting. And while many international institutions like Fitch and other analysts see value in the Nigerian economy, the everyday Nigerian, beg your pardon, does not see the same. Now, when will these projections translate to real value in the real sector for every Nigerian? I mean, we keep hearing that these reforms are good, these reforms are going to bring about this and all of that. But when is this going to happen? And while we're waiting, what should the everyday Nigerian do, especially businesses that are closing shop?
I think one way to begin to expect the impact is around price stability. Price stability, I believe, is very important, and that is one way that Nigerians, generally speaking, can easily feel the impact of all these reforms by the government. By the time we begin to, hear inflation number, moderate, the moderation will be a reflection of stable FX rates. And FX is one of the major elements that the current administration is working on to ensure that, we see stability. The second element around, what can help us to see, stable inflation or stable prices is improvement in security. If we begin to see improvement in security in the states and regions in Nigeria where we grow, where we do farming and they grow food products, then we will have very stable prices of food products. That is when Nigerians will feel it. And I think we should not also forget the fact that we have some elements of harvest impacts. During harvest, for instance, if the harvest is big or large or huge enough, then Nigeria will also see the impact. So what we need basically is improvement in security to help food prices moderate. The second thing to my mind is stable foreign currency to ensure that imported goods and services, imported raw materials are not too expensive. Then Nigerians will begin to see the benefits of all those reforms. Those are the ways I believe we should expect them.
Well, beyond some of the measures and guidelines that the CBN, or let's say the Monetary Authority, have put in place to ensure stable Naira, what else can be done? Because, I mean, just recently we celebrated Naira as, the best performing currency. But here we are. We don't, that stability seems to have, departed, if you ask.
Well, I think one thing that we have to all bear in mind is that, the Naira and the US dollar in terms of exchange rates, belongs to a financial market, called the FX market. And one of the key dynamics of any market is that the value and, pricing of, securities in those markets will go down over time, will go up over time. So what we saw in the month of February and March, for instance, was that the Naira was much stronger than the US dollars in the Nigerian FX market. And this materialized because we had an increase in supply to the market. So the same market, shared 6%. The Naira shared 6% against the US dollars in the FX market in the month of April, for instance. It was because of lower supply to the market. So I'm not surprised that the Naira is now weaker than the dollars, but can it turn the corner? Can we have a recovery? The answer is yes. And I think two things have to materialize: much higher interest rates, because as we speak, we have our policy rate at 24.75%. We have inflation at 33.2%. That looks like a negative real interest rate of above 8%. So we need for higher interest rates to ensure that that gap is not that wide. That is one. The second element is that you will see foreign investors take interest in Nigeria on the back of the positive outlook by Fitch on our credit rating. You will see foreign investors taking interest in Nigeria if eventually Nigeria's credit rating is upgraded to possibly BB from the current B- that we have. So we have all those elements on the cards, and if at the next MPC meeting, interest rate is raised by like 150 to 200 basis points, we most likely are going to see more inflow of US dollars into the Nigerian FX market coming from foreign investors. I think that is the direction to look, and by then we will have the Naira appreciate again. So ups and downs of currency is part of market dynamics.
While you were speaking, I was just laughing because I know I've spoken to a couple of business owners and they do not want to hear what you just said about, having another interest rate hike. And I hope that while the Monetary Authority is doing all of that, we have something to balance all of this to ensure that there is balance in the economy. Because at the end of the day, even the Monetary Policy Authority, sort of acknowledges the fact that this is a trade-off. But away from that, just wondering, if this recent revision is something to be excited about, seeing that Fitch maintained Nigeria's rating at B- within the junk territory. I'd like you to speak to us about the wider implications of these ratings, if we can get that in 30 seconds, because we're pressed for time.
Okay, so good. So the B- is something that is not new. We've had that rating for some time now, and I think it is still not the best for us. So we need that B- to be upgraded. That is one. Two, an upgrade of the B- to possibly that BB implies that anytime we want to borrow money from the international market to invest in our economy, we will pay less instead of paying much higher interest rates. On the part of the business owners, I think this is just one of the toughest times for business owners in Nigeria, because the CBN has no other tool than to increase interest rates to at least address the demand pull portion of inflation in the country. We have to endure until things improve, in my view.
Okay, so for another 30 seconds, I'd like you to answer this. The Global Credit Ratings Agency has estimated that approximately 30% of Nigeria's external reserves are constituted by foreign exchange bank swaps. What's the implication of this? Is this something to be worried about, or is it just hot?
It is something to be worried about, and it speaks to fundamentals, because when we have our FX reserves, being largely, dominated by swaps, it means that if those swaps mature and then they do not roll over, our FX reserves will go down significantly. What can we do to build the FX reserves over time? I think there should be an increase in focus on the oil and gas sector. That is where we generate the bulk of our FX into this country. They should address the issues of theft, address the issues around vandalization of oil installations, and then there should be transparency. Then by then we'll be talking about much higher inflows of FX.
All right. Thank you so much, Tajuddin Ibrahim, for sharing your thoughts with me today on Business Edge.
It's my pleasure.
All right, well, many thanks to you for being a part of today's show. Do have a great day. Bye for now. I am Perpetua Fasomipita.